Whoa, did Bajaj Finance just crash by 90%? Not exactly. Early this Monday, some trading apps showed Bajaj Finance down nearly 90% from Friday's 9,334 rupees. That freaked out investors. The real reason: corporate actions. What actually happened? The company executed a 1-to-2 stock split and a 4-to-1 bonus issue, effective Monday for shareholders on the June 16 record date. Breaking it down: stock split, every 2 rupees share got split into 2 1-rupee shares, doubling your count but halving the price. Crunching the bonus: then, you got 4 bonus shares for every share. So 1 share right-pointing arrow 2, split, then 4 bonus right-pointing arrow, total 10 shares. What you should know: your total investment value is unchanged, only your share count increased and price per share adjusted accordingly. The deluge of -90% price drop was purely technical, not financial. From an adjusted 9,334 rupees, the ex-split price opened around 954 rupees and even moved up approximately 2 to 3% intraday. So, don't panic. This is not a crash, it's just smart corporate engineering to increase liquidity and reward you. Stay calm and check your demot statements post the adjustment. Like, comment, subscribe and share for more such informative video on Finance Seco India. Disclaimer: this is not investment advice. We're explaining market mechanics. Consult a financial advisor if needed.